Thursday, the 15th of July 2024. This is your Bitcoin update. So yeah, nice move to start the week. So Bitcoin is trading right back at its monthly open. So it has recovered all of the move down that we had at the beginning of the month. We're now back to the monthly open all of a sudden, which is a bit of a surprise. So for myself, I turn off the charts. I do not check TradingView. I do not check my portfolio over the weekend. So I wake up this morning after what was a fairly late night and having had a few beers yesterday. Unfortunately, England did not win, but congratulations, Spain. They were much better on the night, so whatever. But yeah, nice surprise to wake up to a lot of green this morning, and that had been going on throughout the whole weekend. So for those of you who do check your portfolios over the weekend, then happy days, because we're suddenly trading at 63k, whereas last time I was looking at the charts, we were trading at 58k. But in terms of the technicals, I think it is natural that we could have expected a move from here. So obviously we had that long consolidation after the drop last week. And for this, once again, what we have continued to see throughout every one of these moves down is every move down does get retraced fully. Okay, all the imbalances within this entire downtrend that we've been in since the beginning of June, they have been fully retraced. Okay, and then it's what happens afterwards that's important. So is this enough to consider this a sign of strength? I would say yes, probably, because it is the biggest recovery we've seen so far. However, we've not had a high time frame change of market structure or anything at this stage. But I do believe it's kind of inevitable that we are going to be doing that at some point now. I'm feeling fairly confident in the low that has been put in here, looking at where things are today. And yeah, the market is looking fairly decent. So when we look on the monthly, we'll start things off here on the monthly. Of course, we, like I just said a minute ago, back at that monthly open now. And I think what will be a really interesting level to pay attention to if we do stay within this range is this old monthly that we've got back here. If I just mark this on the chart here as a monthly level, that 62,669 level, which we've almost essentially been caught within that for the majority of the year now at this stage, March, April, May, June, and now July. It'll be really interesting to see if there is to be a close back inside this 62,600 zone, which would confirm once again that yes, okay, we've got a wick below, but that even if we do get a retrace at this stage with a couple of weeks still to go of this month, but even if we do get a close within there, that would look like a nice reversal candle that could show as like a pretty decent sign of strength for higher prices throughout the rest of the year. Now, I'm not really expecting us to be pushing on to new all-time highs at this stage. I think some kind of range around here is still fairly likely, and we do continue on with this. But I think that 62,600 level looks really, really key on the monthly, and especially if this month does end up closing green, that would look really good. But we're still a couple of weeks away from that, so that will be for something for next week's and the weeks after update. Now, on the weekly time frame, then of course this weekly level is also our monthly open. So this being a weekly level that was untested, we had that big impulsive week down that came down and took the lows, got everyone super bearish, liquidated everybody, and now we've had a rise back up to recover all of that. Now, I think this is a really important level for those higher time frame closes. Are we going to get some daily closes above here, which could signal to us that we're going to go for this high, or are we just going to continue to range at this stage again? I think with on these higher time frame with the weekly, then having recovered this is fairly normal at this stage, and we just have to see what happens next, really. Going down onto the daily, because then it's getting more into everything. Then this has been once again, repeating the same thing. We've recovered the move down, and we have seen this because it was such a big move down. It's taken some time to get back into that. But what we've seen, if we go down onto the 4 hour, we have had this happen before. Okay, where we have these big moves down, they have had these full retraces that comes back into essentially the OB, fills in all the gaps, all the single prints. This has continued to happen all the way since the top. All right, you have the drop here, for full retrace, everything being retraced, but then continuing the downtrend afterwards. And the interesting thing about a lot of these previous ones is that these Mondays have tended to be fairly bullish. We have had a trend recently. There's only been a couple of weeks where that trend hasn't continued, but throughout the majority of this entire range, the Mondays have been bullish, and then the rest of the week has been bearish. Okay, we saw that on a few weeks ago, right? Well, a couple of weeks ago now, where we had that weekend pump. So you had the Saturday, Sunday into Monday, came up, retraced the entirety of this last move down. Okay, and then the rest of the week, as we know, was carnage. You open Tuesday here, and then it's just drop, 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 drop. So we do have to be aware that that has been a trend lately. Even last week, okay, we did have the big move up was on the Monday. Now, of course, we did get continuation afterwards, but that like nice rise was on that Monday. This being after what was a bit more of a bearish weekend, but Mondays have tended to be green days, and then it's the rest of the week that then gets a little bit more bearish. So yeah, have to be aware that this could be something similar with what happened here. Okay, price coming back up, coming all the way back up into this OB, filling the gaps, and then we're seeing a similar situation here with price coming back in, testing what was previous resistance once again, and are we going to see this continuation lower? So from a 4 hour, that's kind of everything really. Yeah, big move down, retrace the whole thing. We formed some gaps here, so what we'd want to see at this stage, I'd say weekly open becomes really important now. You certainly wouldn't want to see this zone traded back through. This also comes back down to your range value area low here at 61,500. So if we do zoom out from this range, at the moment, I think what we'd want to see for the rest of today. Now, I do think we go lower. I think we do put in a bit of a range here. But if we are going to be expecting higher prices potentially to come up and take these highs, which could then signal a bigger shift in momentum with that change of market structure, then you would want to see these single prints hold. At this stage, you'd want to see that value area low hold. You'd want to see this monthly open hold. The fact that we're above it now and we're back testing it as potentially support at this stage, you kind of want to see that hold and push on from here now. You've had a decent high. We've run it back a little bit since that London Open. But yeah, ultimately, you want to see this level hold. Otherwise, it is going to be, once again, looking at almost a full retrace of this whole weekend move going into Monday morning that we're looking at. So yeah, important that it just continues, basically. If you're in a trending move, you want to see it continue. You don't want to see those changes in market structure. I would imagine we probably put in a local top here, and we trade something like this, maybe a little SFP of the highs or something like that. But we'll see how it goes. What else is here? There's the range POC. That's a way off. Like I say, range value area low. Important to hold, so that's 61,500. Once you start to come up a little bit higher, I'm not really like where we are right now. 50% retrace of the whole move down. You've got your golden pocket up here. When you look at this as a range as a whole, then you are going to get your golden pocket lining up with that bigger range POC. But yeah, nothing too significant other than, like I've repeated, we have just recovered the move down. There's no significant change. It's not yet enough to say that this is a sign of strength. However, I do believe that there's a good opportunity that it can turn into that. When you actually look at the speed of this move down, and we had spoken about this scenario previously, right? What you tend to get is you get a balanced move, a balanced move, a balanced move. We were looking at this as having the potential for that expansion that then moves back into that mean reversion, coming back into balance over here. However, what we then saw was it did fail at this stage. It kind of tried to break, tried to get back above these highs, but it wasn't like we were looking at these highs over here as liquidity, wasn't able to go up and take them. You roll over again, then you very clearly get an expansive move to the downside, and then that momentum has now clearly been lost. And what you would naturally look to see is that reversion back towards the mean, which for me would be 67 overall, before we then start to look for those swing shorts again. And if you take a look at some other stuff from this range, I mean, we're now trading back above that anchored VWAP. Okay, so we're back into balance within that. You have had the expansion down. We've come back into balance here. You're back into value after being outside of value for quite some time last week. And when you have a look at the POC, then we are also above that, and we're trading up towards value area high of this whole move down. So that mean reversion idea has more or less played out, coming back into balance, but I do think that we could see if it does continue to range here, then 67 is still a target for any more of a move to the upside. Now, some other important things. I do want to open up the TPO over here, and we'll take a look at that. So let's just open this up. There's some NPOCs to be aware of. So of course the move up that we've seen since Friday has been pretty much just one-sided, mainly buyers, obviously, because we've seen such a big move. Now that has left some naked points of control below us. So we have one here at 57,200, one here at 58,620, and one here at 60,000, so at 60K. So if there is to be a retrace back down again, you would look for these to be tested. We've got those untested points of control and value areas, and we've also had a situation where for the past couple of days here, in fact for the past since Friday, every day opening outside of previous day value. So we have your Friday profile here. You then have Saturday, which opens here outside of previous day value area. Now, it briefly dips into that before getting a move higher. Then we have on Sunday, you're opening once again outside of value area. Not even testing into the single prints from Saturday at this stage, so gaps, imbalances being formed on the move up. And then again today, what do we see? We see an open outside of value area. So for the past 3 days here, we've had those opens outside of value area, not even coming back in to recover any of this imbalance. The only day that we did was that Saturday where we just dipped in. There was a high volume node there. You dipped in, and then you got that continuation. Now, that doesn't mean that we have to roll over and come back down here. Quite often what you see with these breakaway gaps is that they will hold. When you get these significant breakouts, they do create gaps. We saw that when price reversed after 38K. It did create those gaps. That's what got everyone bearish, thinking like, we've got to come back and get these because there's imbalance below and we've got to retrace and we've got to come back down here, blah, 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 blah. And that's when the short squeeze started. So that's the situation we can have now where people start to target these levels, but it doesn't necessarily play out quite as you would expect, where when you have seen strength, if this is strength from the market, you would expect these gaps to hold and to get that continuation. And that just goes, okay, well, look, we've spent enough time down here, right? We had this big move down. It was very balanced. It's fine to move away from it quickly. So as long as you're moving away from it quickly towards higher targets, that's okay. What tends to happen is if you do start to come back in and correct these, then you will correct all of them. So you either do none of them and you just tap into a single print, bounce, you fly, you could just continue trending higher. Or if you do start to come back down below that 61,500, below these single prints from today, then we're likely going to retrace the entire thing. Now levels above us, 64,340. There is an MPOC here from the 23rd of June. And there's a few others above back here. Also, if we're looking on the weekly profiles, these are quite nice also. So we have that 65,100, 65K weekly NPOC from the week of Monday, the 17th of June. And then we have that 71K NPOC up here from the week of the beginning of June. And then, of course, there is one below us there at 57,800. So if we have a look back over here, where is our confluence? So we've got 57,800, which does... Ooh, this is down here at 57,200. But I just want to take a look back on here. And then if we start to just draw fibs, what could we be looking at as the highest probability area? So by the time you come back down into the golden pocket, again, if you get back down to that 618, that will have at that stage have cleaned up all the MPOCs below us. Because 57,200 being the lowest one on the daily, and that takes us back into the 618. And then you've got the weekly points of control as well. So let me just draw this on here. Still just like playing around with some stuff. Yeah, so we've got those points of control, depending on which exchange you're looking at. There's going to be slight differences, but we take it level to level as always. What else is there to say? It's all pretty like... It's another one of those situations today where it's just kind of a wait and see, because you can't long this, right? You can't long it yet. Is there an opportunity to short it right now? Probably. Haven't seen that we've had this rejection. So if there is to be a move back up towards 63, I'd say that gives you a pretty good short opportunity. Yeah, that's probably what I'd be favoring at the moment. So despite the fact that we're seeing strength and we are talking about higher prices and the possibility of this going to 67, I do think the shorts are the one trade that you can have like just good value on at the moment with a good risk to reward here. Even if you're using this as your invalidation, to be shorting with this area, within this area, knowing that it is still a downtrend until it's not anymore, then yeah, I think shorts are still what you do have to be looking for, especially with the trend of Mondays. We know what's been happening on Mondays recently with those Monday pumps that then get fully retraced afterwards. So, yeah. Oh, what else? Let's have a look at other stuff. We don't really need to cover the ETF things. If I just refresh this, I think, yeah, this does show Friday, doesn't it? So there were inflows again. We knew that was likely. We knew that we were going to be getting inflows last week. We also know that this move has been much more spot-led than previous ones. So if I just go on, let's just move this to the 15-minute, and we'll zoom out on here. Then you can see spot very clearly leading the way for this whole recovery. And it's only really been since, well, this showing here, since around about 9 o'clock yesterday evening. So since CME open yesterday, that futures have really caught up. So as soon as the CME opened, then we had that move, that catch up from perps also here, as a bit of volume comes back in. But overall, over the weekend, it was very much like a bit of a TWAP kind of thing. We've seen a very clear change, a very clear shift in momentum from lots of spot selling from this entire move down that reached that point of capitulation. Okay, very, very clear that we had capitulation not only from perps, but also from spot here. And then we have seen what is a really nice recovery so far, spot leading. But at this stage now, perps catching up. That would lead us to believe that we are very likely to see just at least a range here for this to start to cool off, then see if spot can continue to push prices higher, or whether we're likely to see this just roll all the way back down again. Once again, there's not really been a change. Like, we have just, I keep repeating this, all we have done so far is just recover that move. We're not seeing that spot delta is outpacing the move down. Okay, we're not seeing that there's any divergences here or any leading divergences here to be aware of. But yeah, it's just very simple. Okay, you move down quickly, you're going to move back up quickly. And that's just the way that the market's going. And we saw a very similar situation on the NASDAQ last week and the S&P last week, where there was a drop on the CPI day, and then on the PPI day, it recovered it very quickly. It's just imbalance to balance, and that's what we get. Now, the drop in open interest, there has been a little bit of a drop in open interest here, but it's not significant. Again, not at this stage. We're not saying that this is enough to get a real short squeeze here. In fact, sorry, it's not a drop in open interest. It's an increase in open interest, but it is a drop in short positions. But shorts, as we've seen throughout this whole range, still very much like if you're the only shorts that have really been stopped out here are shorts that were opening back towards the end of last week. We're not yet seeing any situation where any short positions that are still open from this entire downtrend have started to be threatened at all. In fact, you're getting maybe a few too many longs opening at this stage, and they need to cool off and stop out some of those before we can be expecting a leg higher. We do still have the spot premium, clearly, and that does mean that funding rates are going to be low to negative a lot of the time, with spot leading the move higher. Then, perps playing catch up, then that does mean that we're likely to see those fairly decent funding rates for anyone that is in a long position. So it's fairly cheap to be holding longs. And of course, as we know, it's going to be very green today, the whole market. So yeah, there's nothing much more to say from that, really. Let's just see how this goes. I'd be tempted to take a short. I would be tempted to take a short, especially if this does come back up, to 63. We got some divergences building here on the low time frames. So, yeah. Maybe tempted. But anyway, I'm going to wrap it up there. Thanks for watching, and I'm going to get back to the stream. Cheers. Bye-bye.